and welcome to Morning Trade with Money Control. I'm Karunya Rao and we're here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly your queries during the course of the show. So guys, keep commenting on our live feed and we'll have it addressed by a guest on the show. But before introducing who we're having on board, let's see what the global handover looks like. European markets ended higher as global investors digested a slew of corporate earnings, new economic data, and some slightly less hawkish messaging from the US Fed Reserve. Stock 600 closed 1% higher with most sectors and major indices pointing to the positive territory. The US economy contracted 0.9% for the second straight quarter, fueling recession fears, but it was a positive Thursday on Wall Street, led by strong earnings from Apple and Amazon. Mixed markets in Asia following a rally on Wall Street. For our own markets, SGX Nifty indicates a strong start. In our What's Trending segment, we decode the shrinking US economy and its impact on global markets. In the stock spotlight today are Dr. Reddys, TVS Motors, Sona BLW and Sapphire Foods. All right, let's take it across to Ben Emons of Medley Global Advisors to talk about what's happening in the US markets, the economy there, the data that's trickling in. Ben, thank you so much for taking time out and chatting with us. Want to know where things are headed, because the markets seem to have factored it in all. Because yesterday we saw the Fed Reserve commentary come by. It was completely, shrugged off. We saw a fabulous rally coming by after, thereafter. Then once again, after the US GDP data, which shrunk for a second straight quarter, once again, the markets seem to have shrugged off all the worries. Is everything factored in possibly?
It seems to be that way. There is a sense that we've passed a real poor tightening cycle, like say the tightening of financial conditions, and that we're now in a phase where, as the Federal Reserve may contemplate to slow down tightening in the future and no longer want to guide the markets with more rate hikes that are very large. In addition to getting then earnings that actually surprise somewhat to the upside, that combination is quite potent. So it gets people off the sidelines and take risk again and start to look at this saying, well, GDP may be contracting, but it's not really a recession. We got good earnings and we have a Federal Reserve that may not tighten as much anymore from the next 6 months. So there's an opportunity here to re-engage, and therefore, particularly, let's say, technology stocks and semiconductors and biotechnology as examples, they're all up now because they were so beaten down in the last 6-7 months. That's now coming back.
But do you think that will eventually happen? Because, officially, if you look at the definition of a recession, it's 2 consecutive quarters of degrowth. But yes, the Fed chair did say that, the recession worries are not, he sort of seemed to have discounted the recession worries. And he says that the US economy is looking okay, far, far away from a recessionary scenario. But given that the other macro data, whether it's on inflationary numbers, whether it's on the yield curve, they're all pointing to a possible slowdown. So perhaps in the next 2 quarters, 6 months' time, do you see things sort of, going downhill when it comes to demand, when it comes to corporate earnings? Even some of these companies' forecasts have been a tad cautious.
Now, that's certainly true, and we have to have caution because we are coming out of a pandemic with such incredible growth that slowed down and cooled off now to a point where we may be at risk for true contraction. Now, this GDP number is interesting, right? We actually dealing with an inventory problem in the United States. We have a lot of movement there as we have still a reopening of the economy and supply chain issues. And on the other hand, we have, companies like particularly retailers that stocked up so much at the end of last year, they can't sell it anymore because inflation is really biting into people's pockets, and therefore they're sitting with unsold inventory. So that's really driving the GDP data, because against that we have a robust labor market. There's a little bit claims ticking up, but it's actually a very strong labor market, as Powell kept reiterating that. So until that changes, until we see the unemployment rate actually rise by several tenths of % in the next few months, the recession is not here. But in the future, yield curves and financial conditions and even technical indicators like a GDP now are all pointing that we are ending up eventually at really an economy that sees lower inflation but higher unemployment and therefore ends up in recession. That's very likely.
Okay, so as we get closer to all of these concerns playing out, how do you see the markets reacting to? Right now, clearly, we've already discussed that they seem to have shrugged off all the worries for the near term at least. But next 6 months, next 1 year, how are you assessing the Wall Street and even emerging markets? Would they also replicate a similar downturn, or would a market like India perhaps continue to outperform?
I think there's definitely a case for outperformance, especially actually in the Asian region, because there the reopening of the economy is just starting, and it's actually having more of a profound effect over the course of next year, because China, as the other economy, is continuously being locking down now, but will be reopened by probably the latter half of this year, if not into next year, and that will have a major impact. So I'm actually very bullish on the Asian Pacific region and see their outperformance relative to the developed markets, including the US. But then again, there's also an issue about inflation that's everywhere, and that's too high everywhere. And we've had central banks in emerging markets tightening a lot more and a lot further and a lot faster than the Fed has done. But now even the Fed and the ECB and others are tightening. So it does become also an opportunity that as inflation does start to moderate, that there will be opportunities in growth stocks again that are growing much faster than the slowdown in these economies like the US and Europe or even recession. So I think it's a kind of that game. You have Asia Pacific outperforming on reopening. You have technology growth stocks outperforming on a recession. And I think that's what we could look forward to in the coming year.
That sounds very encouraging because, last few months, the foreign investors selling has been relentless as far as Indian markets are concerned. But in July, we've seen some easing of that. In fact, the net FII outflow for the month gone by has been the lowest since October 2021. So encouraging sign there. Do you expect this trend to sustain, that more foreign money could come into Asian markets, India, etc.?
I think it will. I think there's enough optimism and as well as, I think, confidence that the entire region will be fully reopened, just like we've had here in the United States. And that itself is a very powerful, potent stimulus to financial markets, because all this travel, leisure activity that we're experiencing here in the States in such a robust manner, you will experience too. So, and then of course, production picks up too. So, and in addition, I think there's another force that will come along. We've had a bit of a correction in commodities. I do think we're going to see another move in commodities higher as the Asian region fully reopens. So I think it's a function of that, and that will draw in capital, foreign capital in particular, that will look for, equities that are actually in really low multiples trading there, much lower than in developed markets.
Well, Ben, great chatting with you and getting some very optimistic, encouraging commentary as far as emerging markets, especially Asian markets, are concerned. Great to have you on board, and thank you once again for chatting with us this evening. Okay, let's touch base with our technical expert, Shivangi Sarda of Motilal Oswal joins us. Hi, Shivangi. SGX firmly above 17,100. Fresh series, what should we brace ourselves for?
Yeah, thank you. Good morning. So we see, we've seen quite a rally in the last entire week, and Nifty is cheering, near 17,000 zones right now. And, even though we've just completed the series yesterday, it still is ready for a next leg of rally. And, every small decline is being bought, and buying can be seen at every support zone. So that is indicating something, there is a smooth runway for bulls, and the index is ready to accelerate to another, 17,350 zones. Of course, any buying can be, done at any dips, and we should maintain a stop loss of around 16,750. And if we are opening, higher this morning. So the stop loss should be maintained higher. I would also like to mention the rollover data, for the July series, which has been quite positive, which is around 76% for this series, which is, higher than its 3-month average and the June rollover, figures. So that is indicating quite a lot of positive, action over here, which is going to continue. July has historically been quite a positive month for Nifty and for the entire market, and we are expecting the positive momentum to continue to higher levels.
Okay, well, great. Here's looking forward to that. Let's talk about some specific stocks. We're in the thick of the earnings season, so most stocks in news are on the back of earnings, of course. Dr. Reddys came out yesterday after the markets closed. Q1 profit saw a solid 108% jump on healthy operating performance. There was some effect of higher other income as well. India growth has outperformed at 26% YOY, whereas there was tepid growth seen in markets like North America, Europe, etc. So the overall revenue was muted, up by about just 6% year on year. But if we look at the entire pharma pack, it hasn't really participated, barring a few names here and there. It hasn't really participated in the recent up move. And Dr. Reddy's also last 1 month, slightly disappointing performance on the chart. What kind of a trend do you foresee?
So looking at the chart structure of Dr. Reddy, we've seen that, there was some, uptick yesterday, but again, it could not sustain itself at higher zones. And that is the reason why, even though the lower lows negation has happened on daily scale, if we, talk technically, but the, sustenance has not been made at the higher zones. And I still feel there is, consolidation expected over here, or some sort of a, lack of positive momentum over here. So I would recommend that technically we should avoid this stock right now. And also, the entire pharma pack, as you mentioned, has, been quite in a lackluster right now, and we could shift into better sectors.
Okay, all right. Talking about better sectors, want to flag off a name from the auto pack. Auto definitely has been a strong performer of late. TVS Motor Q1 profit has come in at close to 300 crores as against a loss in the same quarter last year that they posted to the tune of 15 crore rupees. Revenue grew 56% YOY, coming in at 7,300 crores. Last 4-5 months, TVS Motor very steady and very impressive uptick seen there from 550 levels to now I think it shut shop yesterday close to 869. So tell us, is it headed higher up, or could there be some consolidation or some kind of a dip before that happens?
So looking at TVS Motor, it has been one of the most, promising chart structure from the last 2 months. In fact, it has not, negated its low from the last 5 months if you look at the monthly chart. And this is one stock which remained resilient despite of the weakness in the market, a month back. So this is one stock which is quite positive and which is, which has quite a lot of strength. I believe, the little dip which we saw in the last 2 sessions is, an opportunity for buying, and we could see that the stock is moving up to 900 levels immediately. Of course, we could maintain a stop loss of 855.
Okay, one of our viewers was also asking about TVS Motor. Vishal, I hope your query has been resolved. Want to also flag off another earnings candidate, Sona BLW, another strong performer from the auto ancillary space, and the numbers have also been pretty good. There's been an 18% growth in top line, a 5% growth in profit. Net order book has increased to more than 20,000 crores. Sona BLW, since its IPO, it has performed phenomenally, of course, barring market weakness phases and when there has been an overall correction sort of a trend that has happened. Last 3 months, again, the stock has been muted. It hasn't been able to keep up with the rest of the auto sector peers. Do you foresee any momentum coming by here?
So looking at Sona BLW chart, this stock is kind of reversing from its lower zones. But again, weekly structure is not giving any indication, and there is follow-up, missing over here. So I would recommend that, we could move into better auto sector chart structures and avoid this for the time being.
Okay. A lot of questions actually coming your way from the auto pack. We have a query from Alagappan. He wants your view on Castrol. Can you tell us how are you reading into the chart here and if there is a good chance of any momentum?
So we've seen Castrol has been moving in a very tight range from the last 3 months and 3 weeks, sorry, and it is not being able to surpass 115. So there is some sort of a resistance over there, and I believe we could wait for 115 to cross for a next leg of rally.
Okay. Another question I want you to address again from the auto universe. This is from Kiran. Wants your view on Tata Motors. Tata Motors also last couple of weeks, it has seen an uptake, but not as strong, in tandem with the overall market mood. So talk to us about where this could be headed.
So Tata Motors saw quite a lot of OI addition yesterday and quite a lot of volumes, and the volumes were, the month high volumes. But again, it could not sustain at higher zones. It, dripped down from its high and it could not really move with strength. So I believe, unless and until this stock surpasses 450, I do not believe there will be, continued strength in this stock. So 450 is a level we can watch out here.
Okay, all right. Back to stocks that could be in the limelight. Sapphire Foods. There's a development here, a bulk deal. Nippon Life India trustee has picked 3.34% stake in the company, about 21 odd lakh shares via open market transaction. And after this, previously Nippon Life had actually held 1.69% in the company, and now their shareholding has gone up to more than 5% in Sapphire Foods. Good momentum seen here last 1 month, but if we look at the 2.5-3 months return, still a bit muted, a bit flattish, I would say. So what is the view here going forward?
So looking at this chart structure, it was very rightly corrected that, it has been moving in a very narrow range, and it is not being able to surpass 1150 zones. So, even though there has been quite a lot of positive action over here, but the stock has not been able to, perform. And we saw, volumes were there, on a day before yesterday. But again, it could not sustain at those levels. So I believe unless and until the stock surpasses 1150, it would be difficult for it to sustain and move.
Okay, all right. Let's move right on to some more queries. Vignesh has written to us on our live feed. He wants your view on two stocks, DIXON and Apollo Hospitals. Now, Apollo last 1 month, good 12-13% of an up move seen there. DIXON, however, saw an up move but wasn't really able to hold on to it quite meaningfully. Some cooling off has happened there. So for both of these companies, what is your view?
So, looking at DIXON, the chart has surpassed its 50 exponential moving average on daily frame. And, it has been continuously making lower highs, lower lows. So, the stock is completely in weakness, and which was, also, a cherry on the top is that, yesterday the rollovers data were quite negative for the stock. So I believe the stock is going to remain in weakness and we could avoid this stock. And looking at Apollo Hospitals, now this chart structure is quite stable because, it has sustained at its support zones. So I believe there can be a slight up move over here. Good part is that weekly, if we see the chart structure, the support base has been gradually shifting higher. So I believe 42.50 could be the next levels for this chart structure.
Okay. Addressing our next query then from Mangesh. This is on HDFC Bank, and decent uptick seen here as well in the last 1.5 months from 1280 levels. Now the stock is perched at slightly above 1400. But yes, definitely overall it has been an underperformer at large, and the street has been a bit concerned about the huge overhang of HDFC and HDFC Bank merger. So ahead of that, we keep getting a lot of questions, Shivangi, on HDFC Bank especially. So talk to us about how do you foresee, the pattern, the chart playing out in the next few weeks or months perhaps?
So, looking at the HDFC twins, at par, it has been, quite a lot of in action. since the merger news had come in. But I believe this chart has lost its momentum. Both the stocks, if we look, there has been strength in the entire banking and financial space, but again this stock has not been able to perform as per its peers. So I believe if we want to enter into the financial and banking space, there are better stocks which could be taken for. But of course, HDFC Bank, if we talk about in particular, it did do good volumes yesterday, and we saw quite a lot of run up in the last 1 week. And a good part is it has been sustaining at its important moving average. So I believe there will be an upside over here. The chart structure and the bias is quite positive, but again it will be an underperformer as compared to the other financial stocks.
In fact, Shivangi, I'm aware that there are two banks that you like and that you would like to place your money on at this juncture. So why don't you tell us what have you picked out?
So, I'm very bullish for, the financial and banking space for the August series. And I believe, this sector is one sector which could outperform. And I have two picks from these, this space. So my first pick would be Axis Bank. We've seen that, it has been forming higher highs and moving higher with a good support base after taking at 700. So I believe the stock could touch 760 zones with a stop loss of 710. And my second pick would be ICICI Bank. This stock has shown quite a lot of strength from the last 6 weeks. It has been making higher highs, and it has been continuously moving in an upward rising channel. So this stock is one of my favorite stocks from the banking space, and I would recommend a buy in this with a target price of 850 and a stop loss of 796.
Okay, so Axis and ICICI on Shivangi's radar. But let's shift back once again to queries. Parth has written to us and he wants your view on Venky's India, a stock that we don't discuss very often actually. Last 2 months, I think, once again, very range-bound trades. It has seen some spurts but hasn't been able to hold on to them. So where do you think this is headed now that it's firmly above that 2,000 rupees levels? Do you think it's going to rise from here on, or will there be some amount of dip perhaps?
Venky's is one stock that we do not, track, and we do not have the coverage for, so I will not be able to give them.
Okay, no worries then. Let's move on to the next question. This is from Emmanuel Matthew. Wants your view on Reliance Industries. What do you think?
So, Reliance Industry has been one of the top contributor in the Nifty pack, in the, previous series. But I would say that, it has been comparatively moving in a very range-bound manner. And, I believe if there is strength in Nifty, which is expected over here, this stock is again going to perform. The rollovers data are also positive for this stock. But again, I believe there is going to be some sort of, underperformance here, or we could say consolidation over here. But of course, there is positive bias and the stock could move up to 2,500 levels.
Okay, all right. Next stock we'd like you to focus is ONGC. Prince has written to us and wants your advice on, on this counter. Last 1 month, it has seen a completely reverse pattern to what most of these, large caps in the market at large has seen. It has fallen a fair bit in the last 1 month and continues to sort of languish. What do you foresee here?
So ONGC from the, oil and gas space, I believe, if we look at the weekly chart structure, it had, been falling and it made lower lows from the last, 2 months. But again, there was some sort of a follow-up buying and some sort of, reversal seen, but it could not sustain. We've seen that, last week it made a high of 136, which could not be, held on to. So I believe there is going to be some sort of a weakness and consolidation over here, and we could avoid this stock as of now.
Okay, one last query we're going to address. This is from Pratik and he wants your view on IRCTC. Last 1 month, the stock has again been very sluggish, very range bound. But now that it's crossed that 600 mark, do you think it can build on to those gains?
So IRCTC has been a, laggard from the last, I would say, February. So, the last few months have been completely, negative for IRCTC. And we've seen that, not even 1 month it it gave a positive closing. So I believe, there is some sort of a follow-up buying required over here and strength to build over here for it to, move and for it to start the next leg of rally. And I believe 616 could be an important level over here, which we could watch out for, after which it could, build strength.
All right, Shivangi, thank you so much for sharing your valuable advice and talking to us about the technicals of the market and a host of stocks. That's all the time we have, guys. Unfortunately, those whose queries we couldn't take come right back on Monday and we'll try and address them. With that, it's a wrap on Morning Trade. Thank you for tuning in.